Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, December 5th, 2011. Let's start with the S&P 500 index. Now, on Friday, we had the job report. It was released at 8:30. I have no idea what it said because really, I just don't care what these reports say. I care how the market reacts. So we were gapping ahead of that report, and that report gave a little volatility shakeout at 8:30, an hour before the market was set to open. But I think we opened around where we were before the report anyway, or maybe a little bit low, whatever it was. We gapped up. Now, we're not seeing it here because, once again, the cash index doesn't print gaps usually, and therefore it doesn't look like the actual candle that happened. What happened is we gapped up, and then we sold off, and we just grinded lower with a period of a few hours of sideways action as well, and then finally we filled the gap. So we came close to the 200-day moving average, and somebody wrote me and said, based on my S&P 500 video, they said, well, pre-market we hit the 200-day. Okay, I mean, that's fine. To me, work doesn't get done officially unless it's in the day session, but sometimes if it's going to get done pre or post-market, I guess it can carry some weight, but that's fine. So the point is, it went towards the 200-day moving average, couldn't get above it, and wound up closing near its lows. Now, volume pulled in on the NASDAQ, I believe, and came up on the NYSE. Let's take a quick look. Yeah, pulled in on the NASDAQ and came up on the NYSE. All right, not by much, obviously. So looking at the market action here, the bulls definitely have something to be concerned about. All right, I want to see us get over that 200-day. I want to see us get above this triangle on a breakout, just like we broke down here. I want to see us now get above, and I want to see us get to this 78.6% retracement of this swing, which is the year's range for 2011. I want to see us get there. Okay, that's where I'm looking for a stall point. And then maybe if we pause for a few days, we could try to get through it here. But the fact that we're already showing weakness here, definitely something to pay attention to. So I'm still giving the bulls the benefit of the doubt here. I'm not getting bearish here, but we could see a short-term pullback into support. Support being 50% of this candle. And yes, this candle really doesn't exist because this was a gap as well. But you can use the candle because it fills in the gap, so go to 50% of it. We also have these moving averages, so if we trade down there, especially early on in the week, and it holds, and then it pivots, and we try to get a rally from it, okay, that could be a nice spot to watch to see if we could bust through this 200-day moving average. All right, now I'm doing this at 3:50 p.m. so on Sunday, so there's no news out or any of that stuff that can predict shaking the market. I'm not going to be able to do the video tonight, so I want to get it out of the way. But obviously, if there's news, and there has been just tons of it, then we have to take that into consideration. I mean, if we gap down into that support, then that's just as good as pulling back, in my opinion, as long as it pivots from there. All right, I'm not sitting here and going, okay, we're 50% of this candle, now it's time to buy. No, it's just an area that you then watch for a pattern or at least a reversal from, okay? So that's where we stand. Now, the NASDAQ 100, that's where we stand on the S&P at least. Now, the NASDAQ 100, back above its 200-day moving average, but that's not the key pivot for the NASDAQ 100. I mean, obviously the 200-day is always something to watch, but look at how we've just, come through it, sliced through it, held it, and then broke it. I want to see us get back above this level, this 2353 level. That, in my opinion, is a more important level to get through. So if we can get above that, all right, that would be a wonderful sign, all right, for the NASDAQ 100. The Russell, okay, the Russell tagged or came just shy, rather, of its 78.6% retracement of this little mini swing down. It's not good either. And yeah, we had the big day on Wednesday, but these two narrow range candles right here, I want to see range expansion, still have that 200-day to get above. If not, we'll also be watching for a pullback here. Obviously, if the S&P and the Nasdaq are going to pull back, then we want to see the Russell will probably pull back as well. But we want to see the divergences between the indexes. Who's leading? Who's lagging? Okay. All right. Let's take a look at some sectors. All right, the semiconductors got to bounce, but starting to, let me get rid of this stuff. There we go. Already starting to stall out here with this close at the lows. And, maybe it'll just be like the same thing I'm watching on the major indexes, just a pullback. Okay, but have to respect the work in the sectors. Okay, here's the banks, hit the 89 before reversing, or came close to the 89 EMA before reversing. Here's the brokers. All right, I think closed just over the 50-day here, but you can see it's not good action. Couldn't hold on. Here's Goldman. Above the 50, hey, everything's great. Nope. Okay, not going to happen. Get rid of the fib there. Look at Bank of America while we're here. To the 20 before it reversed. JP Morgan. Okay, JP Morgan. Yeah, had a nice day. Watch that 89 EMA. Here's Citigroup. Closed above its 50. Good. Northern Trust. Above its 50. Watch the 89 at 39.04. Here's Zion. Above its 50. Alright, so not much going on with these that are different than the underlying sectors, or the actually, I don't know, I guess the stocks would be underlying to the sectors, whatever, with the parent sectors. How's that? Here's the cyclicals. Okay, right back into this value area here. So a lot of trading going on here, back and forth, and that's where we found resistance. Got to get up over that 200-day moving average, still above. XLB, yeah, not looking so hot there either. But right now, like I said, still giving the benefit of the doubt to the bulls. Just want to see them step up. Here's healthcare, tagged to 78.6 or close to it. Got to get above that to get a full retracement. All right, biotech's been acting like crap. And you see here, they're on a nice little bounce here, but watch the 50-day at that 1106 area. Okay, 1105.81, I'm rounding up. GLD, still deciding what it wants to do here, gold. Coming into a usually bullish seasonal period for gold. Right, that's, I believe it starts the first week or the second week of December and runs till February, I believe. That's just one seasonal area. And you can see that I really didn't take the time to look up the dates because price rules, and especially, price rules all the time. There is no especially, but these days, there's so much volatility going on, risk off, interest, inflation, interest-bearing instruments, or staying away. So believe me, it's much more than just a seasonal, and the seasonals can get a little knocked off kilter. Okay, when you throw this much volatility in, and it's good to know that in the background. But I definitely do not time trades based on today starts a bullish seasonal period. That's not what they're for. They're more background indicators. Okay. Here's OIL. All right. So a little mini coil here. Seeing if this could get a kick up here to take out these highs of 26.23. Next resistance up here, 26.92. Hang on one second. All right. Catastrophe averted and all teddy bears accounted for. All right. So that's what I'm watching for here with OIL. And somebody wrote me and asked me, can I look at USO, which is basically the same thing as OIL except with more volume. Actually, quite a bit more volume. All right, and it's priced differently, but you can see the pattern's the same. So above 39.74, and then we're watching 40.74. All right, let's look at some of the oil stocks. So you got Exxon. All right, back above its 200-day, and I like the way it held into the end of the week, but got to get continuation here. Got to get continuation. COP. Also above its 200-day, but this is it's not as clean as some of the ranges look, but this is kind of pressing the horizontal line here. But you can see we reversed here and went up a little bit the last time, so maybe these are offsetting and we're going to stay in this range. We'll see who steps up Monday. All right, or again, it could be a nice narrow range day as well. All right, let's look at some of the usual suspects, and then I have a small list to go through as well. So Apple reversed at the 50-day moving average. Okay, that's not bullish, so that has to get offset. We have to get above this tall red candle here at 397.21. That's what we got to get above, and then we got a lap actually here at 406.23. Amazon looks like a bearish flag. Now, about 2 weeks ago, right? Let's see, 2 weeks ago, when we broke the 78.6% retracement, that suggested that we're going to get a full retracement down. And it looked like we were headed that way, but then we got the bounce up. But we have the 200-day moving average here. We have the 20 EMA here. So if we are in store for a dip, watch Amazon here. It hasn't been acting that great, and it's in a nice bearish pattern. Okay, price line. Right, into a bunch of moving averages here. See if it can get above the 200-day. Googleicious. Still looking for Google to test this high, but this may be work done if it gets there. So pay attention to this one. Okay, but Google's been acting well. Let's look at Google on a bigger picture here. Okay, you can see these highs right here would be the first test, and then a break above that to 643 at the 643 area. Right. I mean, overall in the big picture, here's where we opened in 2011. It's actually just up a little bit from here, but may get a little bit of juice if the fund managers say, hey, Google's up, let's try to address the portfolio. Something to keep in mind. Baidu, reversal at the 200-day moving average. Sina, not really acting so great. Broke down out of this triangle, flag, and this one looks like a flag too. Watch the 20 EMA, another one to keep on the bearish watch list, especially if the market takes a dip. All right, how about Research in Motion? Still think that this one can get to 15. It teased us going down to 15.98, but did not follow through yet. Qualcomm. Okay, somebody wanted me to take a look at this. And overall, just the sloppiness. And you can see a couple candles above the 200-day, and then Friday, the reversal candle. It's not looking so great. Okay, a couple stocks that we looked at last week. Let's just go through them quick. AAP. All right, got a little bit of a bounce from here, but it doesn't seem like it's in a rush to go real far. Aria, okay, hit its first target, which was taking out these highs. Then it reversed on Friday, not nice. Ford, okay, above the 50-day moving average. Watch the 89 for potential resistance. Las Vegas Sands, look at that. All right, tried to break out of this little consolidation, and then Friday, boom, reversed right back in it. Okay, that's the problem in playing consolidations inside the bigger consolidations. Okay. All right, BMRN was one we looked at. Okay, hit its target. So it came close, right? Well, it may have fell a little shy. 35.56, came 9 cents shy, but nice move out of this little consolidation. Couple to watch for this week. First is AEIS. This one may take a little bit of time to get cranking, but this looks like a bigger picture. Hold on one second. Okay, sorry about all these interruptions, but this is my third time doing this video. There will not be a fourth, so got to handle it warts and all. It's the one of the the things about working in a home office that you have to deal with, try to limit the distractions. But anyway, so it looks like a bigger picture, inverted head and shoulders here. Could be base in here, so may take a little while, but one to watch. I'd even like a pullback on light volume, and then maybe the buyers could come in and try to break it. We'll see, but definitely one to put on your list. A couple of other ones. Dang. Okay, this is not, this looks higher here, but it's real beaten down, as you can tell. And this may be a really nice January effects candidate. Something to look at. The infamous Ren, baby. Oh, going to the moon. Yeah, I didn't know the moon was down here. But anyway, you can see this one, also one to definitely watch for potential January effects. I'll talk more about that shortly. I'll talk about that in an upcoming video. I'm going to do a class, and please don't spend any money on expensive, ridiculous lists for the January effects. You're just going to be completely dissatisfied and really just feel like you were ripped off. So I'm going to be doing a list for free, a class that will construct the list, and we'll look at some, how to find the stock. So anyway, finally, stamps.com. This one looks bullish, but market has to cooperate. I mean, yeah, could it act bullish, and could it move higher without the market backing it up? Sure, but I'd rather see the market backing it up. So this looks like it's in a bull flag. Okay, this kind of nice move to the upside. And now it's in a little mini coil here. All right. So let's see if it'll get a break. If not, and it breaks down, okay, could get a push down to the 89 EMA. But definitely at support here, mini coil and a bull flag. All right. So that's it. Sorry for the long video, but I had a lot of stuff to go through with a couple of interruptions. And feel free to contact me. The contact info is at the beginning of the video. And have a great trading week and a great trading day on Monday. Let's see who steps up here.